Okay, so you know how everyone's been talking about athletes making big moves in the investment world? Well, today we're diving into something even juicier.
Hmm. Juicy, how so? You piqued my interest.
We're taking cues from the pros corporate insiders to see if there are any winning plays we can, let's say, borrow for our own portfolios. Those folks who are practically swimming in market intel.
You're talking about CEOs, board members, the ones with the real inside scoop. I'm intrigued, for sure. What kind of intel are we talking about, and where do we even start unpacking this?
Well, we're dissecting this article that caught my eye. The Shifting Playbook of Athlete Investors' Lessons from Corporate Insiders. It's like getting a sneak peek at the playbook of the financial elite.
I like it. So are we basically saying athletes and corporate bigwigs are cut from the same cloth when it comes to investing?
That's the interesting part. While they might seem worlds apart, they actually share some uncanny similarities. Both groups have spent years in their respective fields learning the rules of the game, understanding risk and reward.
Okay, I see where you're going with this. Both groups rely on their own version of coaches to up their game. Athletes have their trainers, and corporate insiders have their financial analysts feeding them market trends and predictions, right?
Exactly. But here's where things get really interesting. The article points out the stark contrast between what these corporate insiders are doing with their money and the overall market sentiment. You see, while everyone was busy celebrating the S&P 500's incredible performance earlier this year, it was its best run since like 97.
Yeah, I remember that. Everyone was talking about it. Felt like the market could only go up.
Right. But get this, during that same period, corporate insider BYI was at its lowest point in a decade. Almost like they knew something the rest of the market didn't.
Wait, so while everyone was cheering from the sidelines, these insiders, the ones in the game, so to speak, were hesitant to make big moves. That's a pretty bold statement, isn't it? Who are we talking about here specifically? Give me some names.
Oh, you want big names. How about Warren Buffett? The Oracle of Omaha himself is sitting on a mountain of cash right now. We're talking nearly $277 billion.
Whoa, even for someone like Buffett, that's a lot of cash to have on the bench. And he's not exactly known for being passive with his investments, is he?
Not at all. He's known for being a long-term value investor. If he's hesitant to jump into this rally, it makes you wonder what he sees that everyone else is missing.
Makes you think, doesn't it? Is he seeing warning flags or just playing a different game entirely?
It's a good question. And it's not just him. The article also mentioned a bunch of tech giants selling off big chunks of their own company stock.
Really? Now, why would they do that? Especially when their companies seem to be doing so well. Talk about mixed signals.
Right. We're talking Jeff Bezos, Michael Dell, Mark Zuckerberg, and it's not like their companies are struggling. Amazon, Dell, Meta, their stock prices have been through the roof.
So what gives? Why sell when you're supposedly sitting on a winning hand?
That's the million-dollar question, right? It's
Yeah.
not necessarily about lacking confidence in their own companies. These are smart people. They know how to diversify, spread their risk.
So even with a winning hand, sometimes the smartest move is to, let's say, hedge your bets a little,
Mhm.
spread the wealth, so to speak.
Exactly. It's like that old saying, don't put all your eggs in one basket.
Exactly. And that's the key takeaway here. Diversification isn't just about spreading your wealth around. It's about recognizing that even when a sector is booming, like tech, there's always a chance of overvaluation.
Just because everyone's chasing the next big thing doesn't mean it's actually, the next big thing.
Right. Remember that tech IPO? Everyone was going crazy for a while back. Turns out even people who worked for the company were selling off their shares before it went public.
Wow, if that's not a red flag, I don't know what is.
It happens more than you think.
Hmm.
And it shows just how important it is to stay grounded and not get swept up in the hype.
Oh.
Which reminds me of another interesting tidbit from the article. Jamie Dimon, the CEO of JP Morgan Chase,
Hmm.
he's been sounding a little cautious about the economy lately.
Interesting. Jamie Dimon's not exactly known for being a pessimist, is he?
Not at all. He's a Wall Street heavyweight, a giant in finance. But even he's been saying we might be facing some headwinds that many investors aren't even considering.
So even with all his experience and insight, he's basically saying, hey, maybe tap the brakes a little.
Something like that, yeah. And it actually ties in with what we were saying about corporate insiders being cautious. It's like they're seeing a potential shift on the horizon and adjusting their strategies accordingly.
Makes you think twice about going all in on whatever the flavor of the week is, doesn't it?
Definitely. And this brings us to a fundamental lesson that applies to all investors, not just athletes or CEOs. Patience. Patience pays off.
It's not about hitting a home run every time. It's about playing the long game. building something sustainable.
Exactly. Investing is more like training for a marathon than a sprint. You can't win by burning yourself out on the first mile. You need a strategy, endurance, and the discipline to see it through.
It's about blocking out the distractions, the hype, and focusing on your goals. Kind of like an athlete shutting out the crowd to focus on the game plan.
Perfect analogy. And it highlights a crucial point. This isn't just about making a quick buck, it's about building long-term financial security.
Mm,
For athletes especially, whose careers often have a limited time frame, that long-term perspective is crucial.
absolutely. They need to make sure their earnings work for them long after they've hung up their jerseys, so to speak. But let's be real for a second. Not all of us have those million-dollar contracts. Does this approach even apply to the average investor?
100%. These principles are universal, whether you're managing thousands or millions. It's about understanding timing, diversification, patience, and seeking expert advice when you need it.
So, for those of us who aren't exactly Wall Street titans, how do we start thinking like one? What are some practical takeaways?
Well, one of the most important is to be deliberate. Just because everyone else is jumping on the bandwagon doesn't mean you have to. Remember, even those with insider knowledge are approaching the market cautiously right now.
Do your research, understand the risks, and don't be afraid to ask questions.
Exactly. And don't underestimate the power of tuning out the noise. The financial world is full of conflicting opinions and predictions. It's easy to get overwhelmed and lose sight of your own goals.
Information overload is a real thing. You're bombarded with so much advice, it's hard to know what to believe.
That's why having a clear strategy is so important. What are your financial goals? What's your risk tolerance? Once you have those answers, you can start building a plan that aligns with them.
And that plan might look very different for someone just starting out versus someone nearing retirement.
Absolutely. There's no one-size-fits-all approach to investing. It's about finding what works best for your individual circumstances and long-term aspirations.
So it's like we're taking a page from the athlete investor playbook, train smart, not just hard.
That's a great way to put it. It's about being strategic, disciplined, and always open to learning and adapting as you go.
So we've been talking about this insider edge, but it sounds like you don't need to be a CEO or a pro athlete to get in on that kind of thinking.
You hit the nail on the head. One of the most important things to remember is to think for yourself.
Yeah, it's way too easy to get caught up in the hype and just follow what everyone else is doing.
Absolutely. Even the so-called experts get it wrong sometimes. It's a constantly changing landscape, this market of ours.
That's for sure. So how do we even begin to make sense of it all? Feels like we're trying to predict the weather sometimes.
You can definitely feel that way, and that's exactly why having a solid strategy is so important. And not just having one, but being willing to adapt it as you go.
So it's all about being proactive and not just reacting to whatever the market is doing that day.
You got it. Stay informed, do your research, and don't be afraid to look at things from different angles.
It's really easy to just stick with what you already believe, though, isn't it?
It is, but hearing other points of view can really challenge those assumptions and help you make better decisions in the long run.
True enough.
And never be afraid to ask questions either, even about the things everyone seems to think are set in stone.
You know what they say, the only stupid question is the one you don't ask.
Couldn't agree more. Whether you're an athlete pushing their limits or an investor trying to grow your wealth, curiosity is key.
For sure. One thing's for sure, after all, this investing isn't just about numbers and charts and fancy jargon.
What is it then?
It's a mindset.
Now you're talking. Discipline, patience, and knowing when to trust your gut.
It's about playing the long game, just like those athletes we were talking about before. They know success doesn't happen overnight.
Takes time, dedication, and that willingness to adapt and keep learning. And sometimes you have to tune out all the noise and just trust your instincts.
Especially when even those in the know are being super cautious.
Makes you think, right?
It sure does. Well, that's all the time we have on this deep dive into the world of athlete investors and corporate insights.
This is a good one.
Until next time, remember, whether you're on the court or in the market, it's all about making smart plays for the long haul.